All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. And speaking of participation, right? If everybody can hear me loud and clear, do me a huge favor. Drop me a one in the chat. Let me know that you're all ready to go. I see the ones coming in, right? So I know we are ready. Good morning, everybody. We want to make sure that we start our mornings out with a very strong foundation as we approach the market. And that means we are taking massive action, making sure that we are accepting all possible losses before entering a trade, preparing you for any outcome. Let's make sure that we take that deep breath each and every morning, that we take a look at the market and that we center ourselves, right? In body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. Let's always imagine our trades successfully materializing. Let's obey our trading strategy, avoiding decisions based on greed and fear. And we want to make sure that we are never looking back or stopping once our trade has commenced. So with that being said, let's get this show on the road for this morning. Let me close this out. Let's check out some fundamentals. Let's talk about the dollar, right? So looked at the charts, bond yield selling off, things like that. We've got a reaction in the market based on some of the data that has come out as late for the dollar. So we have it here. The dollar index fell to around 104.2 on Thursday, hovering at its lowest levels in 5 weeks, and U.S. inflation slowed in April, reinforcing expectations that the Federal Reserve will start lowering interest rates in September. We'll see about that. The core inflation rate in the U.S. slowed to an annualized 3.6% in April from 3.8% in March, matching market forecasts and posting the lowest reading in 3 years. Been quite a ride, right? Weaker than expected U.S. retail sales figures for April also provided further evidence that the economy was slowing. Investors now look ahead to weekly jobless claims data and the Philadelphia Fed Manufacturing Index on Thursday. The dollar nursed losses across the board, but continued to weaken versus the yen as the gap between the U.S. and the Japanese yields narrowed. Okay, so that's where we are on the dollar, right? So we take a look at the DXY and we can see on the daily, right, that price has pushed deep, right? We broke through, we recovered, we bounced off that 105.61 level, then we pushed down, and this time we actually broke below that 104, even though today we are showing some bullishness. A lot of reports that I'm reading are saying that they feel like, there's an overreaction with some of the data that came out, some of the U.S. data, inflation, data, and the retail sales, because it's not a trend yet, right? So we want to continue to see more data. But here's the thing, though, the stock market is putting in a rally, right? So if we take a look at the S&P 500, okay, we can see where we got that initial correction out of the 80-20 zone, right? And then look how that flew off that level. So we're looking at our daily, look how that price bounced, made a beautiful move to the downside, and then gave us a nice recovery where we broke and actually retested, right? And then we got another bounce. So, hey, the market is continuing to rally. So we're selling off dollars in exchange to go into that stock market, right? So the market is putting in again a really good rally right now. It is what it is, right? So a beautiful reaction out of 80-20 zone. Wasn't ready to completely turn over yet. Found support, breaking the pullback, and we have continued long with the S&P 500. So if you are trading stocks right now, right? If you're a stock investor, looking pretty good, right? Looking pretty resilient, right? So the market is shrugging off the data and is keeping it moving to the upside, right? We're seeing the bond yield sell off. So again, right, selling those dollars, going into the stock market, and you can see it pushing straight up Pretty good, right? Pretty good. So looking like risk on right now in the market, which means typically somebody answer for me, which currencies do we usually see do well when the stock market is doing well? Anybody?
Commodities.
Commodities, right? Commodities. Awesome. Awesome. Drop Joy some sevens in the chat, right? Joy some sevens in the chat, right? For that. Right out the gate. Commodities, okay, are doing pretty well. So let's take a look at two in particular, right? Fundamentally. So if you guys are focusing on your charts, you take a look at this NZD. So the New Zealand dollar held around 61 cents, hovering at its strongest levels in 2 months, as the latest U.S. economic reports were dovish for the Fed and weighed on the greenback, right? So we know that with the dollar. So we'll skip over that. I want to move into here. So externally, the Kiwi, right? That's the nickname for the currency, also received a boost from the stronger yuan following reports that China's government is considering buying unsold homes to ease oversupply. At home, the RBNZ is widely expected to maintain its interest rate at 5.5% in its meeting on May 22nd. Policymakers are reluctant to start cutting rates until there's evidence that inflation will remain sustainably around 2%. Now, still, newer data show that the country's Q2 two-year inflation expectations fell to their lowest level in almost 3 years, fueling speculation that the RBNZ might consider lowering rates later in the year. Okay, so positive data for the New Zealand dollar, and we know that is a commodity. So somebody out there tell me New Zealand's number one commodity is what?
Dairy.
There you go. The need, right? Dairy, drop some sevens in the chat. Great job. Great job. Okay. So we're getting a rally in the stock market. We're seeing commodities do well, right? For the most part, with the exception of the CAD right now, because of oil prices. All right. But the economic data overall for the CAD is not bad, right? But they are heavily weighed down by oil, right? And oil prices have been heading to the down, bouncing around, but headed to the downside. So if we take a look at the Australian dollar, okay, eased below 67 cents as investors reacted to weak domestic jobs report, right? So they just had some jobs numbers come out that was weak. Data showed that Australia's unemployment rate increased more than anticipated to 4.1% in April from 3.8% in March. That followed data showing domestic wage growth unexpectedly slowed in the first quarter, prompting markets to price out any chance of further interest rate hikes from the Reserve Bank of Australia. Elsewhere, this week's annual budget showed that Australian government aims to ease cost of living pressures by spending billions to cut energy bills and rent while reducing income taxes. Meanwhile, the Aussie remained close to 4-month highs as slowing U.S. inflation reinforced expectations that the Federal Reserve will start cutting rates later this year. The local currency also received support from increased expectations of fiscal support for the Chinese economy following Beijing's concrete steps of larger stimulus through long-dated bonds. Australia's number one trade partner is who? Somebody tell me. China. That's it. Drop some sevens. Great job, everybody. You guys are on it. You know this stuff. Right? You know this stuff. So despite some of the internal concerns economically with Australia, right? Stock market is rallying, seeing a boost from China, right? So a lot of times reading the fundamentals, we can get an idea, right? When we're trading what we see, right? We can get an idea of kind of, before I even look at my technical charts, which way the charts may be heading, right? Before I even turn them on, by reading the fundamentals, okay? Ryan, good morning, sir. How are you?
Good morning, bro. I'm doing well, man. How about yourself?
Doing pretty good, man. Always glad to be here. It's Thursday, which means tomorrow is Friday, my favorite
Yes,
day
sir.
of the week. So fundamentally, man, what's going on out there with the yen? Any new data?
Um, the GDP data came in yesterday, and it was a little soft as we talked about yesterday morning. Um, and that kind of spurred the pickup in conversation regarding them adjusting rates sooner than October. So that's something that's definitely on the table, and we could be looking at a July rate increase post October. Debts are increasing on July with um, a signal in June, and that signal being them decreasing their bond purchases even more than they did this month. So that's where we are.
Got it. Got it. Appreciate the update, sir. Anything else out there fundamentally that you have your eyes on and may have read about yesterday or overnight?
No, nothing that you haven't covered.
All right. All right. All right, everybody. So any questions out there regarding any of the fundamentals? No? Okay. So right out the gate this morning, so we already took a look at the S&P. Let's look at the take a look at the Dow, US 30. Okay. So we know the market is rallying, right? So a while ago, right, we were keeping an eye on this consolidation, right? We had it kind of in this rectangle, saying we were looking to see which way it was going to break. We know we were in the 80-20 zone, but we had this level marked out, and you can see that is a clean breakout. So if you guys followed that, had your charts marked up, waited to see which way that was going to break, that's a beautiful move, and it's closing right back in on that 40,000 level. Okay, 40,069. So that's where we are. So they kind of mirror each other, right? For the most part. So we saw the S&P come off that level, that low, that major low, push back up. So we didn't get that price to turn over and continue down. We wanted to see how price was going to break out because we had this rejection. See how it came right back up in that range, and then we broke out to the upside. So we'll see how we react at these highs, right? So we have today the 16th. Okay, we do have unemployment claims that can impact the market. Then we also have the Philly Fed Manufacturing Index that'll be coming out this morning that could create some movement. So we'll continue to keep an eye on that. That's the Dow. Moving down, want to take a look at the NASDAQ. Okay. Similar, right? Made a deeper correction. Okay. So we got this 80-20 to play out on the daily. So this actually broke the level. Okay, and push down further, but you can see it found support. That's a weekly level, and it put in at the same type of rally. So when you frame the market out, there's no mystery, right? The pattern is there. The pattern is there. So that's the S&P, the NASDAQ, and the Dow. Same type of price action running to the upside. Okay. It's a pattern-driven market. It is a pattern-driven market. Once you figure that out, you frame it out right, you can do some damage in the market. Okay. So even your indices following the Fibonacci sequence. Taking a look at gold, right? Taking a look at gold. Came through December into the beginning of the year, saying, hey, gold longs. Okay. And we can see that we are rallying again after the correction. Okay. So gold longs are still in play. Anybody trading gold long? Anybody sitting in those positions? Any of my gold traders?
TP hit.
TP hit. Congratulations. Sevens. All right. Hitting those sevens. For joy. Those lucky sevens, right? So still running long. Okay. All right. So that play is still good, right? That's been the play of the year, right? Gold long coming out of December. Interest rate cutting environment, is what the market's looking for. We've got gold moving to the upside, right? So we didn't get, this one just kept accelerating. Really didn't get a correction on that last fib, a deep correction. But we got a nice one here. And so we're looking to continue long on gold. Any questions there?
No, sir.
All right. So let's continue down, right? Taking a look at crude. Okay. Just really, right, pushing to the downside, but you can see here where we're just bouncing around. Sometimes we have to zoom out. Hard to see the picture when you're in the frame, right? We've got to get outside the picture frame and take a larger look at everything. Okay. So it's really just bouncing back and forth, right? So this latest downward pressure, right? That's weighing that CAD down a bit, that Canadian dollar a bit, being that oil is his largest commodity. And we can see, right, how we're pushing. We haven't broken and closed below that level. This is key. This 77.61 level. Look at that, right? We can't close the day below it. We'll see what happens today. We've gotten below it a few times, but we keep closing above that level, right? So it is in a range, right? So we've made lower lows and lower highs, but now we are just sitting in a range. We need a breakout from this area. Okay, so we want to make sure that if you're trading oil, that we continue to keep an eye on it, right? As it's just moving sideways right now. Any questions on oil? No.
No, sir.
All right, let's move up. Take a look at the Aussies. Okay. So we read the fundamentals. We click on our charts, and it is indeed moving bullish, right? We're looking strong this week. We're testing at 91.16 level. Okay, but we are coming into, right? This is a pretty good high that we're coming into there. Okay. Pretty good high that we're coming into. All right. So it's made a really good run back to the upside. So if we come down here and we take a look at it on the 4, we can see that, yes, we're still within that down AB boundary, but right now it is rallying, right? But we are at that 91.16 level that is testing in that 80-20 zone. Our 4-hour stochastic is in the sell zone. And so we are looking right now, okay, how this price reacts. You're 1 out. We have not gotten that 382 yet. So we've got a 1-hour stochastic that's still in the buy zone. So we can see how we've got it's a little mixed up now, right? As at a high, it's testing a major high. You can see on the 1 hour, we got a nice bearish candlestick there that rejected that level, right? So keep an eye on this one to see if we start to see the correction off the high of 91.16 and continue to move down. But overall bullish, but we are looking like we're trying to be in the correction phase there, right? So continue to watch and keep an eye on that Aussie CAD play, all right? So I would wait, right? If you're looking to play that correction, I will wait to see if I can get that 1 hour stochastic to move back into the buy zone, and then see where it's at then, because this has been extremely bullish. We know we've got a weak Canadian dollar right now. We've got a strong Aussie, right? So wait for some additional confirmations on that to see if it wants to move back below, but we don't have real good alignment right now. Okay, so overall bullish, but we're looking like we're trying to correct. All right, so patiently wait on that one. Any questions on the Aussie CAD?
No, sir.
All right, that's pushing pretty strong, pushing pretty strong. Aussie Swiss. All right, following the same long narrative, right? But we're approaching, right, some pretty high levels to where we may see, right, a bit of a correction come into play here soon, right? Because we're breaking through some levels. We know when we break levels, we like to retest at some point. So if we come here, we can see we're doing exactly that. So this is a beautiful move. That's right around that 61.8 level on the daily fib where we wicked out and we just recovered from there. Right? That's beautiful price action on that Aussie Swiss. We know that we've been selling Swiss francs. Okay, still following that narrative. Right? They cut rates. Boom, they came out the gate. First one to cut those rates. Right? And currencies for the most part have been moving long against it every since. So the question becomes is, hey, we're long against the Swiss. Are we going to see a correction on the lower time frame? So if we take a look here at the 4-hour, we can see that it's fighting, right? It is fighting. So if we get a break, right, of our trend line, if we get a break of our trend line, we may be looking for that correction, right? I am more so with these Swissies. I'm going to look for low prices on them, right? So me trading the 80-20, not necessarily my play on these because I've been so bullish against the Swiss franc. So I am going to wait for the correction and the low price that has paid off for me thus far. But if we hit that zone, is it tradable? Absolutely. Myself, I'm just going to wait, right? I'm just going to wait to see if I can get a new established low price and to get long, right? So we can see here on your 1-hour, you did get price on this smaller wave to push higher, right, into that 80-20 zone. So we're looking for a correction, right, and a continuation, okay, like so. Okay. So I'm going to look to actually float with the trend on this one. So I need a low price. So not my play right now, right? But in order for me to get to the low price, I need that correction, right? So is it tradable? Absolutely. But for me, I'm going to wait. Any questions on that Aussie Swiss?
No, sir.
All right. Easy enough. Aussie Yen. So you can see, right, moving bullish. Okay, we're trying to get back to the highs, that long wick, that 104.95. We are overbought, right? Overbought. We're at 99%. Okay, so we're gonna watch this closely. Still bullish. Okay, the Aussie is rallying. It is what it is. But you can see here where we've got some indecision here at this high candle. Okay, so we want to watch to see how this daily candle closes. Do we get, two bearish candles to the right, giving us a new swing high? If we do, then we may see a further correction to the downside, right? So if we end up making this a swing high, then we could see, right, this move back down, right? But I'm thinking correction, right? A correction and a continuation. Because if we look here on the 4, okay, you can see how that's starting to settle in. So we've got to watch to see if that holds or if that monthly level breaks. But overall, right, I have been bullish on this. Right, it's made a good move so far. Right, if we put our cloud on, we can see, right, but we're above cloud. We're holding right now. Right, So we're going to continue to keep an eye on this monthly level that is testing right now. So overall bullish. Do we correct further? We'll see. We see where we are here coming off this 118. So let's see. Do we hold or do we break below and push lower? Okay. So we are in the up retracement zone. Okay. Some of you may be trading this to the downside. That's cool. Right. But we ultimately, right, want to hit that target if we're counter trend trading that one, right? So far, so good. Lower lows, lower highs. I want that lower price. Okay. I want that low price. Can we break below that 102.90 and continue to move down? If you're short, that's going to be a huge play for you. Just low price on this Aussie. Okay. Do we see the Bank of Japan come in, with hikes or whatnot? Still want to move along against the yen. Okay. Still want to move along against the yen after this correction. Any questions on the Aussie yen?
Can I see your 4 hour again?
Mm-hmm.
Okay, so on this play, even though the 382 was reached, and this is where I start confusing myself when a new field comes in. Once that D extension is hit, and it doesn't quite do the 80-20 retracement, but hits the 32 already. I done forgot my question. This is basically where I get confused at, whether to look for the continued move up or play on the fact that that D extension got hit for a move down.
What, this extension here?
Yeah.
Yeah. So anytime you get a new AB boundary, right, and extensions get hit, you start to look for the possibility of a correction.
Gotcha.
Right. You start to look for it, right? Because what that 161.8 represents, right, an exhaustion point. Right. It represents that 161.8 represents completion, right? Completion of that wave, right? But we know that just because it hits the extension doesn't mean that it's done running. That's why we always wait for that new swing high to form, which gives us our new B boundary. Right. So a lot of times people who like playing, right, the shorts off the extension, right, because it represents exhaustion. Like with some scanners and things like that that you find in the market, it'll market for a sell position, but then it'll those scanners will like continue to repaint themselves and adjust because a high hasn't been formed yet after that exhaustion point, right, has been hit. So it'll just keep extending, right? And then all of a sudden it'll say, okay, this is the spot to sell. So because you want to wait the extension hit, but before you start getting short, you want to wait for that next fib to set up, which is identified by a new swing high, right? So we know what our C is. That's a swing low. That's our deepest point within the AB boundary, right? So in the market structure, it's still just a series of higher highs and higher lows in an uptrend with an up AB fib, right? So here's the low, here's the higher high, higher low, right? Higher high. We're just framing it out with the fib to measure, right? That C to D move. Okay, that B to C and then that C to D move. That's all we're doing, right? So, but you want to wait for that extension to get hit in the new high to form. You want to wait. That's why I love smart trading so much because it's automatically doing it for you. It's automatically alerting you saying, hey, there's a new AB boundary, right? Then we can start looking for the possible correction, either off that B boundary or once it hits that 80-20 zone. All right, great question. Any other questions on this Aussie yen? No?
No, sir.
All right. Aussie NZD. Okay. Turning over. Okay. So we know, right, that the New Zealand dollar has shown some strength. So it's creating a correction in the market. So you can see here where we put in a high, here, then we put in lower low, lower high, lower low. Okay. So this has definitely been correcting. Okay. We didn't hold here past resistance becoming future support. Right. Kind of still in that zone. But you can see here where our stochastic now, okay. Our stochastic now is in the sell zone on the daily. So what you have to start to watch for, and we're just looking at this daily chart for right now, is this going to become the higher low? Okay. Is this, okay. See that there? Is this going to settle? Okay. Our stochastic is oversold. Is this going to form a swing low and then start to move back higher? We don't know yet. We're going to see. But if you come in and you take a look at the 4, you can see where we've got a 4-hour stochastic, right? That's back in the buy zone. And we have price reaching our buy zone on the Fib. Okay. So this is one to look out for as we close out the week to see if this Aussie starts to take back over and move long. Be patient. Okay. Be patient with it. See what happens. Make sense to everybody? Yes? No?
Yep.
All right.
Yes, sir.
Okay.
Yep.
All right. Just working our way down through the time frames. Okay. Aussie dollar. Okay. So we have a situation where DXY fell off a little bit as a result of the data. Okay, so you can see that for the most part, this has been pretty strong moving to the upside now. Okay, 66, 67, that's a weekly level. See if we close above it as we close out the week. Okay. You can see we are now breaking and retesting that level. The question is, do we find support? Okay, do we find support? Because when we come down to the 4, we can see where we're getting a pullback off of this move. See how we came around that 50% range and now we're corrected. So where are we going to find support on this pullback? Okay. We get bond yields continuing to sell off, stock market continuing to rally, right? If that DXY can't find support anywhere, eventually we're going to see this continue to rally. All right. So if we come on, add some additional indicators here, put our cloud on, you can see where we are. Definitely bullish. Okay. So where are we going to find that low? You can see this 4-hour stochastic is turning over. Okay. So we want to see that correction in. We come here on the 1. Okay. Be patient. Okay. Let's see. Let's let some things line up for us to see if we could potentially, continue long, add a position, or get long for the first time on this Aussie dollar. Okay. Continue to watch the DXY, continue to watch the bond yields, right? Because the market's moved pretty aggressively based on the recent data, which I don't think was, yeah, maybe there's some cracks, starting to show in the economy. I don't, but we've seen this before, some data to come out, and show that, hey, it may be time, for the economy to start to, settle down and make a U-turn to the downside. But the U.S. economy has continued to be resilient, right? Continue to be resilient. So we'll see. But right now we're in up retracement zone. So let's just continue to be patient on this to see where we settle out, right? These are some good levels. This is a daily and a weekly level here. All right. So let's just continue to be patient. Don't want to just dive right in. Let's wait for some things to align for us. All right. If you're already long, just continue to be patient as this price continues to move up on the Aussie dollar. Any questions?
No,
Nope.
sir.
All right. Pick your spots, right? Keep in mind, right, that even if you're trading like a 15-minute chart, 30-minute chart, whatnot, whatever have, what have you, 5-minute even, be patient because these are not 5 and 10 pip moves. Even like on a 5-minute chart, if you're looking for a C to D and you've got your fibs running in a particular direction, it's a pretty good setup that can run for a little while. And so because once you're in there, that's right. We always say we never look back once our trade has commenced because we know that can take a while to run. But sometimes that's the only setup that you need, right? If you're looking at starting out, hey, I want to just try to hit that 1 to 2% a month, right? To get myself going. If I could do that consistently, then it's a matter of, you know, scaling up. So if I could get 1 to 2% consistently trading at a 0.25%, 0.5%, like, man, if I could just do that and scale that up to 1%, right? Drop me a 1 in the chat if that makes sense, right? Pips and percentages, right?
That's what I like about the Darwin. It shows you your percentages on your history.
Correct. Correct. Especially as you move through that where everything is being configured for you. So then you can move on to silver. So I like that in the beginning because it gives you a good little test run, right? It gives you a good little test run, right? Before you actually move into silver and competing and things like that. That's for the capital, for the seed capital. So I really like that phase because it allows you to bounce back and forth a little bit, do what you have to do your fine tuning, and then like you say, Joy, be able to track the data all along the while that you're figuring things out, figuring what your sweet spots are and how you want to be able to reach the percentages that you want to reach, right? The calibration stage, right? That's right. Thank you. I couldn't think of the word, right? The calibration stage. So that I think that's beautiful how they have that set up for traders, to kind of help you figure things out, get that fine tuning out of the way before you move on to those next phases. Okay. That's why they tell you just trade, don't so much worry about it, the results necessarily, just trade. Just trade in that calibration stage. So this is where we are. So just continue to be patient with this setup, right? Be patient with the setup. Don't have to find a trade every day. Sometimes there's weeks that go by where I'm not even in a trade, right? Not even in a trade, just waiting on things to set up. But I know when I find that one that meets my criteria, right, has a possibility of making some pretty good gains. So that's the Aussie dollar. So with the time that we have left, is there anything out there, right? I know we looked at indices, gold, oil, the Aussies, anything out there that you guys want to take a look at before we wrap things up for the session this morning? GJ, GUG cat. Okay. So let's look at the GJ, see where we are. Should be still looking long on the GJ. Corrections looming, right? Maybe. Yep. So here we are on the weekly. Okay, just moving pretty hot. It's just pushing. Right. Just pushing, right? Turned over, found some support there on the daily. And as we move through, right, this has been so this was the play that we were talking about a little while ago. We got the correction. This is back in the buy zone. This may continue, right? This may continue to the upside. We'll see. These have been tricky to trade, right? The long play off this low was really good, right? We had the conversation about that. But there's so much back and forth with the Bank of, with the Bank of Japan, right? The market just seems to correct, right? The Bank of Japan talks it down, the market reacts, and then it just continues long, right? So right now, that looks to be trying to put in a low. Right? So we'll see. Here we are on the one. So you can see our time frames are mixed. Okay. The time frames are mixed on this. Okay. And that's the way it is sometimes. Okay. That's the way it is. We're still holding. So if we take a look, we see here we are with the cloud. We can see zoomed in now. Look at what that low is doing at 195.24. It's sitting there, right? It's set on that level and then it pushed off that level. Now, our 1 hour, our 1 hour stochastic, right, is in the sell zone, right? We're overbought right now. But that 1 hour, that daily is still kind of moving up into being overbought, but not quite there yet. But we're still hovering, right? If we right, you can see how we're still hovering above that 200 right now, moving average. Okay, so this is still sitting bullish. All right, so we have to see it turn over and take out that 195 level, take that A out to continue bearish, right? So it has the ability to go either way because it's just bouncing back and forth right now, right? But if I'm looking at this right now today, that's a bit of a bullish call for me right there. That's me. That's my opinion on that. On the pound, looking at the when I'm looking at the pound and it's moving pretty good against the CAD, the Swissy, the yen, and the dollar. The only thing where is that pound is showing that corrective action to the downside is against, the NZD and the Aussie. So right now, right, I would have to say that that's trying to push long. Right. That's all I can give you on that. This has been a tricky pattern here. Right. The back and forth there. Okay, with that. Don't know if that helps, but yeah. GU. Let's take a look at it. Right. We've been moving long, right? Approaching some pretty high levels. You've been saying buyers have been looking to scale in and been experiencing mixed signals of losing trades. Yeah, and here's the thing. I tell people all the time, like, first of all, it's okay to be wrong, right? That's why we use risk management. But if you've gone at it a couple times, you just can't figure it out. When in doubt, stay out. Like if you're not if if you're looking at you getting mixed signals on those yen crosses, just leave them alone. Just leave them alone. There's other setups, right? So sitting on your hands is a position, right? Making the decision not to trade is a position, right? Because your first goal is to, as a trader, professional trader, is to preserve capital first and foremost. Okay, so if those GJs are making, I mean, the yen crosses to you aren't making sense, you know, stay out of them. Right. To me, the only like the real clear one to me has just been that Aussie yen because of what's going on with the Aussie and the market. The stock market is rallying. So to me, that was an easy play to take a shot out of all of the yen crosses. Right. That's why I played it to the upside. But the rest of them, when you look at the yen, we know that there's some uncertainty there. But for the most part, it's been weak. They stepped in and intervened, but you can see the market rally right back against that. Right. But then we know that the Aussie has been definitely bullish. But some of the other pairs, it's been a lot of back and forth with. So when you pair that against the yen, sometimes it can give you a hard time. So, just sit on the sidelines with it. Look for something else to trade it. Don't trade it. Don't trade at all. And there's nothing wrong with that. There's nothing wrong with that because you don't want to keep getting blown up and then have to use a lot of good trades just to get back to break even. So so the GU, right? We're moving long, right? We've been pushing long. Today we're coming in, we're correcting a bit. Again, we'll see if that DXY can find some support. But you can see here on the 4, right? This has been an 80-20 play that has just been running. Right. So this may, right, until that dollar finds support, right, that A will probably get taken out. We'll see what happens. But you can see this on a 1. This is above the cloud. Yes, we're in the 80-20 zone here, seeing a correction. So I don't know if anybody spotted that. I didn't spot that. Right. Got funny price action there. Right. But that actually was utilized to create the B high. That can be tricky sometimes. But this is moving down. But being that this is above the cloud, I would be looking to see if we can get a correction. Right. And then see if we can get a continuation along. I mean, the fact is right now, the way the market is reacting to dollar news as of late is pushing that price down and selling off dollars in favor of the market. Oftentimes we'll see a correlation with the pound and the stock market, making a run and doing well, right? Sometimes we can see that the pound benefits from that. So I would look to see if we can get a low price and a continuation long on that. Right? Everything changed since yesterday. Yeah, it has. It has. That dollar, man, could be a trick bag, man. It's you know, because it can play both sides. It can act as a safe haven too. But right now, the markets are risk on, right? So you can see it's starting to find some support today, but that may be a slight pullback to test that candle, then a continuation lower. Or maybe we double bottom. Maybe we come in at 103 before we come in and start buying a dollar again. Right? You never know where those buyers are lurking. But for right now, that's just been turning over, making lower lows and lower highs in that zone. Okay. So if we cleared this off, right, you would say like, man, that hit that 106 level, and we've been turning over, making lower lows and lower highs, right? And so we'll see if we get a break and a close back above 104.37. We'll continue to keep an eye on the fundamentals. Like we said, we got Philly Fed and some things coming out. But we'll see. Now I said Philly Fed, that's the Philly Manufacturing Index, right, today. Philly Fed Manufacturing Index. Yep. So we'll see what happens as a result. But that zone that we were looking for price to settle and continue long, it reversed, but then it turned right back over. So we'll continue to keep an eye on bond yields and things like that for the US dollar. All right. So let's look at the pound CAD. Continue to push long, right? 172.75 is where we are now. I can't remember if I took my fibs off of this. I think I did. But we can look, right? If that's a range, right? We're just continuing to push higher. So we're bullish. Right. So we can look for opportunities to get long. Yeah, I took my no, I didn't. Here we go. So right, it's continuing long. Okay. Wasn't sure when I redid my charts if I had redid this one. But this one is right, as crazy as it looks. This is trying to complete the sequence. Okay. So we got to pull back. Here's an extension here on the 4. This is what I mean, right? When we were just talking, like, these are big moves. Okay. Big moves. So you can see how, as crazy as the price action looks, right? Moving along. I don't know about you guys, but after all these years, I find it amazing. Right? So, we're looking to just continue to follow that price action. Right? So we can see how this reversed out. After all that bouncing around, that was an 80-20. We've taken out the A. Okay. Pull back. We pull back to a 786. Dang. Right to a 127 extension. Fib is no longer highlighted. So we've gone from an 80-20 that's taken out the A, the reversal, to moving long and hitting an extension. So this is our C. Should have a high forming. That should show up pretty soon. But this should be a new AB boundary. Like so. So the question becomes, can we get a pullback, a continuation, right? The game starts all over again. So that's where we are on the pound CAD. Any questions over anything that we covered today? I know we blazed through, so.
Yes,
All
sir.
right. All right. Ryan, anything before we close out the session this morning?
No, sir. Continue to be patient with people. Like Ben said, pick your spots. You don't need everything. One, two good trades, find the opportunities, and if nothing meets your rules, I think it's Tyrone told Kay yesterday, no trade is still a decision, right? No
That's
trade is
it.
still trading. You can
That's it.
make that decision. So kudos to the accountability group
Hmm.
for supporting the team through those ups and downs of the process. So kudos to you guys for having those conversations and for giving great insight.
Yep, that is true. That is true. Appreciate you bringing that up, Ryan. Great job, right? Drop some sevens in the chat for the group. All right.
Benny, I have a request, um,
Sure.
probably for tomorrow or Saturday.
Okay.
If we can go over, because Michelle was having a problem with understanding, I guess, market structure as it relates to the swing highs and the swing lows, like finding those, sometimes you have a swing low or a swing high that is one candle, and she's
Okay.
trying to figure out, well, trying to understand or try to get clear on what that, um, how to really find that to make sure that it's a swing low, because she wants to map her fibs manually before she uses a,
Oh,
so,
okay. Okay. Yeah,
it's
we can
not
definitely
just
do that. Probably on
Saturday.
Saturday, so we can spend real good time on it.
Yeah, cool. Appreciate that. Yeah, because JC posted, how to look for it with the sun. Remember, so you probably see that in the chat. So,
Yeah, I saw that. I saw that in the chat. Saw
mhm.
that in the chat for sure. Okay, yeah, we'll take a look at it because once you get that down, right, you can put in some work. You can put in some. You really can, right? That's a really powerful to understand, especially on your higher time frames,
Right.
especially on your higher time frames, like when you can spot a market low here, right there. Okay, when you can spot a market low, this pullback and that swing low forming, right? We see that building on a lower time frame. You see how that got bullish off that low, that held. Right? That reinforced itself and it got long. So that's key. And here was the previous load there. Right. And as you move over, as you do it on the higher time frames and you look at it, it's clear because it's not as much price action. So there's not as many candles, right? That can kind of jump things up for you, but you can see it clearly. I love looking at it from the daily time frame, looking at those lows for them and things like that. So we'll spend some time on it on Saturday, right? We'll build it out. We'll clear a chart. We'll build it out, and we'll go from there. So I appreciate it.
I don't know if she's on, but she can probably elaborate what her struggle is.
Yeah,
But
yeah,
You said it perfectly, Dynette.
okay.
yeah,
Exactly. Thank you so much.
You're welcome.
yeah, and indeed. So yeah, we'll break it down. We'll break down the market structure because that's important. Because we always say like if you strip down the charts and you just ran off of market structure, you can really do well, right? Because of the way we teach you how to identify those swing highs and swing lows, right? So you can see like here. You can see, right, when that swing low is put in or that swing high is put in, right? No matter what the overall direction of the market, whether this is a correction or an extension, you can see the power of these swing lows on the higher time frames and what they're doing, right? And how those candlesticks can signal you and it's just talking to you, right? The sign language of the market. Right. So there's a high, right? And then this is playing out, the fib sequence is playing out on those smaller waves on the lower time frame. So we'll definitely talk about it. Definitely talk about it. It'd be good to go back and take a look at that. All right. So that is it. Everybody, enjoy the rest of your day. And always remember, just don't count your pips, but indeed count your blessings. Bye for now.